So, Lars Daniel, I think we'll start up. First of all, we would like to welcome everyone to our seminar with Seafood Explain, which is our quarterly webinar. And today we're gonna jump into a very interesting theme, but maybe introductions first. I'm Ragnar Rønning, and together with me I have you, Lars Daniel Garshol, lead seafood analyst, salmonid sector in Kontali. We're going to do something very interesting today because a week or two ago on Edge, our seafood insight platform,
three weeks
ago, you published an article about the resource rent tax and the aftermath of it. What happened, the big bang, and it was all there. And as normally, I didn't understand a thing. So now we're going to do another one where you explain seafood to me, and this time resource rent taxation.
Yeah. It should be. It's a follow-up from the previous webinar, January webinar, where we also had the same, as a topic in how we viewed, the take and industry outlook for the sector as a result of this resource tax bill that is now approved at a lower rate, 25%. But where also there remains uncertainty as a result that the model frameworks isn't clearly defined, and this is of course related to the norm price concept, which people are getting more and more familiar with. This same as it's what price should you be taxed on, and also what costs.
Yeah, but we have some topics going through these 30 minutes, and I have not too much time, but hopefully you can explain it to me. But the first thing that you told me when we start talking is that there's been a kind of a shift in the political attitude towards the industry over time. There's been a shift there, and you even have a slide about it to try and explain it to me. So maybe you can explain for the viewers as well.
Yeah, because we have followed this industry for a very long time, going back all the way to what you could call the salmon revolution, where in the 1960s you showed the proof of concept that this was possible to do in Norway, all the way through the industrialization period, where you redacted the law where you could only own one license, right? Going through the years and periods here where the state actually had direct ownership in different companies, but since sold out. And in the early 2000s, they commercialized the access or right to produce. But during the last 15 years, there's been also a notable shift in the state or political attitude towards the industry as a result of also earnings going up and being significantly more profitable, where 10 years ago they introduced a maximization of profits, a traffic light system where you also had to pay a fee for an auction of a new license capacity, and a notable shift in what happened here in late May, where they approved this tax bill, which really maximized their profit from day zero, since the license was produced by taking a 25% share of the value creation or cash flow, if you would, while this industry has been built up over 60 years, where other people have taken the risk. So it's a notable shift in the state also role at stake in the industry.
So they don't take as much risk together with industry anymore. Now it's only, we call it profit sharing, maybe. Or
they've taken a direct share of the cash flow, which means also that for the farming companies, what has happened is of course they've lost the same share to the state, and the owners have had a direct impact, but it also reduces the potential with finance costs not being deductible here, the availability and the possibility you have to service debt also to a degree. And with taking cash flow out from operation, it also directly impacts your potential at the same rate to do investments. So what should you do with the profits, right? And this is now the position the industry needs to adopt, where it is uncertain on how this. If you take
because that's my next question. Because the resource rent tax agreement is okay, it's there, it's done, but there's a lot of issues there, and a lot of things are still unclear, isn't it? So so how do you adapt to something you don't know what it is?
Well, that is what will be, say, tested, disputed, and also very likely trialed in court. But if you sum it up compared to what was the proposal 8 or 9 months ago, 25% tax rate is better than 40, right? But it's still the same framework that isn't clearly defined, same complexity and issues that is now settled, but the industry will need to adopt and position themselves with this regime that is not specifically made for the salmon industry, but from, say, the same model that they have on oil. In addition to that, the agreement included signals where you should expect also changes in the framework for traffic light system, new indicators, but also ocean farming, which is a potential from 2027 and going forward, should be adopted the same at different rates or into a similar type of concept. That also directly impacts the outlook, at least for what will be the investment profile and cycle going the next 10 years.
It doesn't sound like a great way to encourage investment in new technology or offshore. If it's we'll wait and see how it goes, and then
it depends on how it's formulated, right? So it can theoretically be neutral, but there's a major part that you don't have either cashback claim or finance costs being deductible in this type of are central topics that also will be in focus next 6 months to a year going forward, right? This makes the real long-term effects on the investment levels still unknown for the longer-term prospect. For the short to medium term, there is a direct consequence that the tax subject, which is only the sea pace part,
only the salmon in cages, right?
On growing in cages is the tax subject that you will tax on, and not the onshore or other parts of the value chain, either downstream or upstream, where, as we mentioned in the previous webinar, the outlook for the investment cycle that was resource rent tax was significantly more investment in large smolt strategy, which is for those who are listening and don't know as much about the salmon, is producing bigger smolt than taking a short time period in the sea. But this onshore not being part of the tax subject,
there's no kind of incentives to do that investment anymore, because if you only
you don't get it deductible, but you lose your 25% share of the cash flow it generates. So it's not as attractive as previous, right? And many projects are still on hold and canceled, and this was expected to increasing and higher degree at the pace this investment cycle will go, producing larger and larger smolt and a higher share, but has been significantly set back by this resource rent tax. So it goes from being an industry outlook in terms of production and outlook from limited, as it was before this happened, to more limited.
So it's gone from less to even less for the stupid one.
Yeah.
Is there only kind of challenges and pitfalls, and are there no opportunities going forward here? Is it for there's been a lot of talk about the aquaculture supplier industry and how does this affect them? Short time, we've seen bankruptcies, we've seen projects being cancelled, and I guess those are the ones who have felt it the most in the short amount of time since the announcement of the e-social taxation.
Yeah. So when we talk about, say, the industry outlook and the salmon industry, we always include, say, the entire value chain, which also are companies and segments that are directly or, say, indirectly affected by this, but also represent, say, where the consequences are the highest, because the investment cycle and profile of the salmon farmers are the revenues for the supply industry.
Yeah.
And it has a direct impact where we've also seen, say, many projects being put on hold, having significant consequences for companies. And here there is a notable shift in what also will be the strategy going forward. And one way to view it is also say that it's challenges, but it also involves some opportunities.
What is this shift you're talking about?
It is, of course, say, where will investment take place? At what pace will it be either a shift from Norway, say, in large multi-investment taking place in other regions, or at lower pace in Norway and increased focus on other regions, for example. The same with this, say, closed technology and offshore and other new types of technology, both related to fish health and welfare, but being able to also getting access to license capacity and generating growth. That will drive also the outlooks there are still, and the opportunities are still there. So that is not changed, but it's a difference here in point in time what is medium to short term versus long term growth prospects.
So, but are there what are the main barriers for the Atlantic salmon, the growth in market or production? And you have made a very complicated slide there for me, so this is please explain.
Yeah, it's more the point when we talk about growth, right? What is growth, right? And when you're producing, it's same this that goes also to the central aspect of the resource rent tax. What's been driving the profitability and higher prices? Is it the sea itself, or is it the devaluation of the currency, or is it such an attractive market and product that you want more and more? And it's predominantly it's a market side and world-class product that we produce, which is both healthy, it's fresh, both retail and food service segment love it. They want more of it, but it has become a limited good. So while you've seen also in certain markets volume growth, you've at the same time seen price growth, right? And this graph that you see here shows the historical 20-year relationship between price increase and demand.
So supply and demand.
Yeah.
More. Yeah.
So the regression line here shows that if you have, in order to have unchanged price, supply has to increase by 6%.
Okay.
And we are far less below this line with this potential.
Yeah, we are around 2, maybe.
Yeah, or closer to 3.
Yeah.
From 4 to 3. Yeah. But the most important aspect here is that the market wants more, right? And salmon farming is and remains a market opportunity. So that's the key message and key takeaway. It always also needs to be and have growth in an ESG sustainable fish welfare aspect. And you see this in the investment profile and what the industry is doing to tackle the problems. So there's a lot of focus on both also on the social license part.
Yeah.
But the key takeaway is that the market wants more, and it's limited the availability to produce. And
and what's the barriers then?
Yeah, so that's what we're saying also when we're talking about the resource rent tax. It's a barrier because it directly impacts the availability you have as a farming company to service that and also use your profits to generate more investment and produce more.
Yeah.
And capacity also being limited in terms of the access and right to produce, but also the fish welfare and health aspects of it, and sea lice they being issued, but also good sites and competition over seawater areas that are good for salmon farming. And it's not as a guarantee also going forward that you will have access to the most and best sites.
Yeah.
And here you have the growth that is coming and happens at the time period where also the cost of capital and inflation is up across the board. So everything is becoming more expensive, right? And it takes time to invest in and generate, and it also likely takes longer time than you envisage. But growth is coming, only at a slower pace and a rate that is lower than what the market wants. So that's also why we expect growth going forward. But what will drive investments is still that the salmon farming industry is attractive from a market point of view.
There's still good margins in selling a salmon. Yeah.
Yes.
Yeah. But as I see the graph you show here, is that there's the MAB capacity, and we are almost there. Today we are pushing towards the kind of maximum capacity. But then you said on the previous slide that one of the kind of main drivers is ESG and fish welfare and fish health. And fish welfare means that, okay, we have 20% mortality in the industry in Norway at least today, but there's no incentive to take that away here, because then you kind of fire through the MAB roof immediately, and then you kind of have to release even fewer smolts into the sea because maybe it's better economy, but there's no kind of incentives to do the investments in fish welfare either, because that's on the land side maybe.
So this graph shows the relationship between what is the regulatory limit in terms of how biomass you're allowed to have in sea versus the biomass that grows and you harvest on every period. Where there, if you take now in June 2023, we have a surplus of approximately 19 million fish of the oldest generation that will contribute to lifting the biomass towards the ceiling, where there is flexibility short term, and that will generate growth into the second half, volume growth, right, into the second half of 2023. But when you look at the medium term, we are not far from reaching full production. And this is not only applicable for Norway, but also Scotland, Canada, Chile, right? The other big producing regions. But where you don't have the same now tax regime, where large smolt will take a bigger role than we previously envisaged. So that's where the shift is in terms of utilizing the MAB capacity. So we call that turnover. And when we go forward into the longer term, new technology as offshore will be important in terms of generating growth.
What about land-based then? Do they have the same kind of conflicts? Is it as you see on the sea side, because there's area conflicts between fishermen and offshore wind and now offshore mining in Norway, but you will probably have the same on land-based as well, because the nice spots are very often by the sea.
But for land-based, of course, it depends on what type of technology. If you use full-scale RAS or hybrid using intake of salt water, But what is perhaps somewhat surprising is that the access to sites that are good also for land-based is perhaps also a barrier for that industry, both in terms of the market that you want to focus on and create growth. But it will take time to generate volumes from these new technologies that significantly impact the global growth rate, right? Where also proof of concept is needed to have attractive for financing to generate this.
And there's no proof of concept yet. You think for land-based it may be starting to get there, but offshore is far away.
Yeah, offshore hadn't started, and land-based it's been shown and successfully produced, but not at say large scale 5,000, 10,000, which you will have tests on here in the short term. That will also be important to deliver on to generate and secure financing and increase building new projects and creating growth. So it's we're going into a period that land-based is very, very interesting to show and large scale production and trials that will be important to evaluate the growth prospects from these new technologies. But it's general for all these types of new technology. They take a bit of time and they cost a bit more than envisaged, but they are coming.
Yeah, so you see a potential there.
Yeah, definitely. It's no doubt about it.
Yeah. But we're starting to run out of time, not yet, but soon. But if you look at the industry outlook, a kind of brief summary of what we talked through and also what you see ahead, how would you sum it up for me?
Yeah. So there is a direct consequence of this tax regime. That will have negative impacts on the supplier industry in the short and medium term, where there needs to be shifts, right? And also in strategy, where the way the industry and some farming companies adopt to this will be determining also for the aquaculture supplier industry in the medium to short term. In the longer term, new political signals also creates more uncertainty, but there shouldn't be any doubt that offshore, closed, and land-based is coming. What we expect and is likely to happen is also a shift away from Norway in investment pace onshore to other regions within the salmonid. So when we talk about salmon, it's Atlantic salmon and large trout. It is also likely that consolidation is a part of the potential outcome here, where increased focus will bring to other regions, so improving their state of play or investment into the infrastructure, which is also an opportunity for some. Seeing more favorable returns than you can find perhaps in Norway.
35% better.
But what remains here is there is a challenge picture also for the industry that perhaps have disappeared slightly with the focus that has been in the resource rent tax debate, and the industry is doing a lot, but it's important to find opportunities to be more effective and innovative and solutions and products to solve productivity, fish health, and welfare, in also improving the social license in reuse and ESG compliance and energy efficiency for the industry. Overall, say the aquaculture segment is declining, but there are some segments here that we envisage to have a higher growth rates than other. Atlantic salmon is perhaps the product in terms of a market perspective that is mostly interesting, and that will trigger investments and modernization and a focus continue on this species, but also reliance in terms of the production technology part of it. If you move to other species and other segments,
The other salmonids, you mean?
within other salmonids, trout, and say farming, freshwater farming of trout, so small trout and pigmented trout. It's also a substitute where there is room for growth, where we expect a significant focus and increased production.
Do you see it already? And is it specific regions that?
Yeah, as example here, Iran and Turkey and China is also has a long tradition and focus on freshwater farming.
Yeah.
That is likely also taking place, but also back to this the market perspective, where what is driving it and making it so interesting is a market that wants more and more. And so brief summary in one sentence is that there is still a lot of interest and a market scenario going forward the next 10 years also that is promising in terms of the market perspective, and we expect to see continued growth, but perhaps more limited than was Norway's role before this tax regime.
So less supply, high prices, still in the short term.
Yes, short term, we expect more volume being generated from this 19 million plus revenue that there is potential, say, into the second half now. And that's also a interesting topic, say, more short term, how will the market respond to increasing following 5 quarters out of the last 6 where you have a decline in production, right?
That will probably be the next seminar then. In 3 months' time, we can guess the Christmas and Easter prices on salmon, so no pressure there. But
there are very, say, promising outlook on how the retail segment, perhaps in Europe, are positioning themselves to being able to and want more, to sell more, right? Because it's such a popular product, and where you are, salmon is a part now of a global protein.
You need to have it in your stores more or less. You can't ignore it.
Yeah.
Oh.
And where the price points for everything and inflation are up. The question perhaps there is more: can you both beat inflation and the 25% tax?
Yeah, who will pay that extra 25%? Is it the farmers, or is the retailer, or is it the consumers?
That is more the question that remains uncertain. But the overall picture for the long-term outlook is a bright future still. Yeah. But as we've always said, surprises may always happen.
Yeah. And you can read more about those surprises on our new platform on Edge.
Yeah, and that's what we've tried to do also, bringing, as an analyst in Kontali, trying to bring some insights when things happen and surprises happen, both in what are the weekly changes, what have we done in production models that changes our outlook, but also when publishing insight articles when something happens, and that we share our thoughts straight away and come also with an in-depth analysis, and the combination of both the figures and thoughts and explanation gives an edge.
An edge, yes. A bedtime read from Lars Daniel. They can go through the numbers, but also see the insights behind them, and why do we believe it change and what are changing.
Yeah.
But I think on that note, we will say thank you to everyone who joined us and tried to listen to you explain me some difficult topics, but it's more clear to me now, at least. And we see our viewers again in 3 months' time for the next webinar. So thank you, and have a good day. Bye.